Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 24th, 2013. And this is the second video, a follow-up to the Short Trade Ideas video put out on Friday. I'm doing this video right now before the open here on Monday. It's about a little before 9 o'clock Eastern Time. And so most of these videos are, the charts are as of the close Friday. So let's start out here, get into these. I'll try to go through as many as I can as quickly as possible. This is ELLI May, symbol ELLY. This was a short here on the breakdown of this uptrend line. We hit the first target back a few months ago, actually. And the stock has since bounced. Didn't really go much of anywhere. Looks like it barely went above the entry price. And as the chart has remained bearish, I've left it on. As you can see here, I've added several trend lines since then. We've broken down. After the first target was hit, we had this nice bounce. Breakdown of this trend line fell just shy of the second target, and the stock has since walked its way up this ascending or slightly ascending channel defined by these two orange trend lines. And we have several touches here on this lower trend line, and as you can see, prices are now spending most of its time on the bottom end of that channel. We've also run into resistance here, this horizontal line. And so for those of you in the trade or looking for a new short trade idea, I believe a break below this ascending channel here, this trend line, will more than likely bring prices down to this second and final target. Just a side note on this stock, if you take a look at the volume at price histogram here, let's try to brighten that up a little bit here. This is very, very thin. If the stock does break this support level, makes a solid move below, as you can see, there's very few trades in this area, and that's what we refer to as a thin zone. And so really your next key support is down at this level. Fortunately, this stock doesn't have a very long-term trading history. I like to take a look at the weekly charts and make sure there's not any more relevant support. And as you can see here, this stock looks like it came public with its IPO back in early 2011. So we don't have a whole lot of trading history, so I'm really focusing on the daily chart. Either way, for now, this remains my final target. Although I'll take a look at the stock if and as it gets to this level, and consider maybe extending some additional targets. Okay, moving on to Expedia. We're looking at a weekly time frame chart here on Expedia. This stock hit the first target, which was this primary uptrend line. If we look at the line here, this starts off the 2009 lows. It has defined the entire bull market run in Expedia, and the first target was hit back in early June. We hit that target for an 11.2% gain, and my next short signal or add-on, if you're already short, will be on a solid break, preferably a weekly close below this uptrend line. And as you can see, their prices have been flirting with that trend line as of late. Clear divergences were put in place at the highs on this stock. With this, if you look at the orange trend lines here, you have this large rising wedge type pattern. I have this yellow sub-up trend line in here. And let's take a look at the daily chart real quickly. On Expedia, I had listed separate targets for the daily and weekly time frames, and I do that not for confusion, but there are many different traders with different trading styles. Some are shorter term traders, prefer to take quick profits, and might also use the daily charts to time entries and exits. But what we see here, definitely the momentum has been waning in this stock. We had this parallel channel. Prices broke down there, found support at this level, which was my first target on the daily chart. We hit that, bounced up in this yellow wedge type pattern, and have since we broke down from this bearish rising wedge pattern, the stock has been stair-stepping lower with these minor trendline breaks. And as you can see here, I've drawn another one. This would be our next sell signal, break below that trend line, which would more than likely bring us down to this first target area, and I believe ultimately beyond. Again, from the daily chart, doesn't look uber bearish, but when you zoom out to the weekly time frame, again, this is the entire bull market trend line here, and my belief is once this trend line breaks, prices will ultimately over time more than likely see this second and final swing target down at the 35.75 area. BAC, Bank of America, this is a daily chart. On most of the bank stocks, I had listed some suggested stops, which were some of which were exceeded ever so slightly a couple weeks ago. The charts remain bearish, so I have left those on there. Again, suggested stops, just as the targets. These are suggested levels, levels that I'm usually looking at. And if a stock remains bearish, sometimes I'll leave it on if it exceeds the stop level. So I've left these trades on, and I believe they have more downside to go. This is a trend line that I'm watching on Bank of America. I have redrawn these slightly since the last post. Yeah, this yellow trend line is a secondary trend line that comes in, and I do expect prices to come back to at least this support zone, and I still maintain this target down here at the 10.05 area. Is my primary and final target at this point in time. As you can see, there were some nice divergences put on at the highs. And if we look down here on the MACD, and you'll notice this on a lot of stocks, once the MACD crosses below the zero line, that typically puts you in downtrend territory. You know, this red shaded area is the MACD below the zero line. You can see we were in a downtrend here in Bank of America. Once we broke, the MACD came above that. That put us in this uptrend. We had this brief downtrend again here. And since then, since this point right about here, call it here, MACD flirted with the zero line, but has remained above in positive territory. And if you take a look at where we're at right now, we're flirting with the zero level. In fact, you know, according to this, we're just slightly negative. So something to watch. I think this stock has more downside. Citigroup, similar story. I've done a few redraws on the trend lines here. This was the suggested stop was somewhere right over this level, and the reason for that orange line up top, you know, we had some reaction highs back here. And like so many stocks, this is just a common theme over the last few months. We've had these fake outs, tremendous amount of bull traps where I've seen clear resistance levels, whether they were horizontal resistance levels, tops of wedge or channels, and we've had those overshoots, which I talk about extensively on the site. You know, breakouts in themselves are bullish action. You have a lot of new buyers come into a stock. You have a lot of shorts that stop out when they see a stock break out to new highs. But when you see those new highs fail like that and prices come back, not just to retest the highs, that's normal. Sometimes we'll see a retest or a slight move below. But when you see this impulsive selling, very little volume, I pay a lot of attention to volume on breakouts. Not only did this breakout not have above average volume, it was well below average if you look at the volume down here in Citigroup and so many other stocks. So again, non-confirmation of the breakout. Going back to the daily chart, we had divergences building all along. Prices were making much higher highs while the MACD RSI failed to do so. We had a little bit of an overshoot here on this downtrend line on the MACD, and that's common with the price overshoots. So again, another stock that looks like it has more downside. This has been the target, 41.10, and remains my one and only target at this point in time. FDO, Family Dollar. Yes, this is a very busy looking chart, folks, and I'm trying to go from memory. This was one of the longer term trades. I've had quite a few short trades on here going back to the last correction that we had from September, mid-September, around September 14th down through the November 16th lows. And a lot of these stocks, in my opinion, entered a new bear market at that point in time. Now this chart's a little bit messy here. We can zoom out. You'll see this longer term uptrend line here. This is a 2-day period chart. Back to the daily chart, you know, we had this rising wedge. I can't recall right now. I don't have in my notes where this entry was, but I believe we shorted it somewhere up in here. Prices moved down, broke this primary uptrend line, and we had a big gap right here. My first target was at this level, T1. And as always, if you're short a stock and it gaps below the first target, that's where your fill is going to be. So the first target was hit on this opening gap, which was at 56.93 for a considerable gain. Since then, the stock continued a little bit lower after back testing that level. That's something we see very often. My first target was a support level, and since that support level was gap below, it's not surprising that the stock pushed back up to back test that level before falling lower. Fell just shy of my second target, which is down here at 51.38, and has since moved up. And I've added this trend line I've been watching for several weeks now, and prices finally broke below that, moved back up to back test it, and in my opinion will soon continue lower down to this level. Now again, this is a very busy, sort of ugly chart, and let's take a look here at the weekly chart. This to me is much more clear, paints a clear picture of what this stock is doing and where it's going. Here's the lows that Family Dollar put in back in 2008. Looks like very early in January 2008. We've had a lot of clean tags of this uptrend line all along the way. Look at multiple touches, very well-defined trend line. If you take a look at this line up here, as prices made higher highs, the RSI clearly made lower lows, as well as the PPO and the MACD. And we had a breakdown, and once again, what I like to see on a breakdown of a trend line is that impulsive selling. That tells me, at the very least, the long-term uptrend was broken and put in jeopardy, and the fact that that happened all the way back in late 2012, and prices have failed to come anywhere near the old highs. So, in my opinion, Family Dollar, the run in FDO is over, and although anything's possible, this stock can go on and continue up to make new highs, and probably will if the market continues to power up from here over the next 6 months plus. Otherwise, my expectation is that this bounce looks to me, based largely off the daily chart as well, it's probably run its course, and the stock will continue the resumption of its downtrend, and these are the weekly downside targets on FDO. Hovanian, symbol HOV, one of several home builders on the site, short home builders. And let's see, we have this orange uptrend line here, which prices have just now begun to break below last week on Friday. I may have done a few redraws since the last post on this, but we were first watching this yellow ascending channel. We had a breakdown here. Divergences were put in on the highs over here. Let's see, we can see those a little better there. And so we're watching for a solid break of this level, which will more than likely bring prices down to this T1 first target at 410. I'll move this over here. That's my current preferred target, and we'll just have to see how things go from there. For anyone currently short or looking to short this stock, this is a horizontal resistance level above, so I would place a stop on a close somewhat above that, 1, 2, 3% above, whatever your preference is. Give it a little room, and that's HOV. Take a look at the weekly chart on HOV, and again, these notes were posted before. You can reference the static charts, talking about these overbought readings. Every time in the past, and this goes back 10 plus years, that we've seen the stock reach these overbought levels, we've had significant corrections. So to think that this time will be any different, is it possible? Certainly, but we're looking at prices also right now challenging this uptrend line, which has been in place since late 2011. So a break of this uptrend line following this extreme overbought reading tells me that the stock has considerable more downside, just like it has in the past when it's reached such overbought levels. IACI, this one's been on for a while. Here's another very clear ascending bull market channel. This comes off the 2009 lows. Once again, And as you can see, this stock has traded well, just going long on these primary uptrend breaks. Here was a long signal back in 2009, and we've been in this ascending channel since, and broke down from that ascending channel when I believe this stock was originally at as the short trade back in looks like late October. Another thing to note here, as I posted, the 40-week moving average, which is the same as a 200-day moving average on a, looking at a daily chart. This moving average has done a good job of defining bull and bear markets, at least since this point here back in '07. So let's take a look, zoom in. So once prices are above it, we're in a bull market. Once prices cross below that line, we're in a bear market. And as you can see here, prices push back up, challenged, made a few attempts here, failed. Finally, we made a clear breakthrough, and prices have remained above that 40-week moving average up until this point. Now, we did have this move back above recently, so I'm watching this. This is a whipsaw signal that could be interpreted bullish, and had it not happened following such a breakdown of a long extended ascending channel, that goes back many years, I would be a little bit more bullish on the stock. However, I've left it on as a short trade because I do believe that like many other stocks, and the momentum that the market's had lately, I think this is just a fake out move, and we'll know very shortly because the stock is now challenging that level. So we're looking at a weekly chart here. You can keep an eye on the 200-day moving average, but for more solid confirmation, you'd want to see a clean weekly close below this 40-week moving average, since we're really basing this trade off the weekly chart. And this is my ultimate target down here. I don't have it labeled on this chart, but we have called around the 3450 area, and again there's some targets labeled here on the daily chart as well. KO is Coca-Cola Company. Have a Coke and a smile if you're short this one, because I think it's going to go a lot lower. Very nice long-term rising wedge pattern, again coming off the 2009 lows, the March '09 lows. So this has defined the entire bull market run in Coke, which coincides of course with the current, or we could say recent, we'll see, only time will tell, the recent cyclical bull market in the overall stock market. Either way, just looking at this chart alone, we see a nice breakdown of that long-term trend line in a back test, a high-level back test. And since then, Coke has been selling down impulsively. Very nice, strong, multi-year divergences in place on those highs. And my belief is that Coke, over time, will see at least this $36 target, the first target, possibly move down to the second target level. However, I would expect this is a pretty nice support area. Coke is a big blue chip stock. I'm not going to try to milk too much out of that trade, so more than likely, personally, I'll be covering at 36, and we'll see how things go from there. We get a bounce or a reaction, I may re-enter the trade, but again, that depends largely on the broad market and the charts of KO at the time. Here's a daily chart. On the last static post that I made, I mentioned this horizontal line and the 200-day moving average as a support level where we'd likely get a reaction or a bounce if we hit it. As you can see, that happened. We hit it to almost a penny, went a couple cents below, and bounced. I don't think that bounce will last too long. I think prices will continue lower soon, down to this level here, around the $36 mark. And this is the weekly chart on Lennar, and as you can see, nice support shelf back here. This is going all the way back 2004, 2005, 2006. A lot of support, which the stock broke below, and after all these years, we've finally gotten back up to that level, skirted among it. We cleared it a little bit, which again goes along with this whole bull trap theme. Looks like we had taken out that level, but failed to hold it, and now we're starting to move back down below that former support, now resistance level. So again, you're looking at a rising wedge pattern. At the very least, this uptrend line divergences were in place at those highs, and prices rolling over. So I do believe over time, especially if we see interest rates move up, continue to climb over the next 6 months, year or so, as we all know, that's going to put a damper on the market and definitely put a damper on the housing market. And it would not surprise me in the least to see Lennar come back down to this area here, call it $22 area. It's pretty thin between there. So over time, that would be my swing target for Lennar, the $22 area. Okay, that wraps it up for part 2 of the short trade updates. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed.